Beth Kobliner, Get a Financial Life, Personal Finance in Your 20s and 30s. Embark on a journey to financial wellness with Beth Kobliner's Get a Financial Life, Personal Finance in Your 20s and 30s. This book summary offers crucial insights and strategies to help you prioritize your financial goals, reduce debt, save for retirement, and invest wisely. As you navigate through the various stages of your life, learn the significance of securing health insurance, cutting expenses, building an emergency fund, and smart tax planning. Designed to simplify complex financial concepts, this summary offers the guidance you need to build a strong financial foundation, even if you're just starting out.
Seven Basic Laws for Financial Success. Learn about the 7 fundamental principles that can help you achieve financial stability and security. If you're struggling to save money despite your best efforts, you're not alone. Many people face this challenge, but there are steps you can take to put your finances in order. The following 7 basic laws can help you achieve financial stability and security. First and foremost, prioritize your health insurance. Even the slightest medical issue can lead to financial bankruptcy, so make sure you're covered. If you don't have a health plan through your employer, search online for options and quotes on your own. Next, tackle your high-interest debt. The best approach is to put every extra penny towards paying it down. Some loan interests can be so high that you'd earn a better return investing the money elsewhere. Search the web for credit cards with low interest rates. Don't wait any longer to start saving for retirement. Start when you're young, so that interest rates and investment strategies will work for you as you get older. Take advantage of your employer's 401k plan or find other savings options. Banking costs can add up quickly, so try to reduce them where possible. Some banks waive fees for those who maintain a minimum balance, so look into that option. Additionally, build up a nest egg for emergencies by saving enough to cover at least 3 months of living expenses and set up an automatic savings plan. Investing your money may seem daunting, but joining a no-load mutual fund pool can reduce your risk. Consider investing in bonds as they carry less risk than stocks and will help you diversify your portfolio. Lastly, reduce your taxes by calculating if itemizing your deductions will save you more compared to taking the standard deduction. You can find tax forms on the IRS website. By following these 7 laws, you can take control of your finances and set yourself up for a financially stable future. Master your finances. To live comfortably, you need to manage your finances smartly. Identify your goals and create a financial worksheet. Record your income, expenses, and revenue sources accurately. Keep a spending diary, account for big expenses like housing, furniture, car loans, and tuition. Develop consistent budget and bill-paying habits. Using finance software like Quicken could help you organize your finances. Finally, subtract expenses from income. A negative result necessitates cutting back on spending or earning more money. Start paying attention to your finances today to build good habits that will help you become financially stable throughout your life. Financial Guidelines. Follow these simple financial guidelines to achieve better control of your finances. First, the debt rule recommends keeping debt, excluding student loans and mortgages, under 20% of your annual pay. Next, the housing rule suggests limiting housing expenses to 1/3 of monthly take-home pay, which may entail having roommates in high-cost cities. Finally, the savings rule advocates taking saving as seriously as bill payments, putting away at least 10% of take-home pay monthly. Proponents of rigid savings might even consider stashing an extra 5%. Digging out of debt. Debt can feel like an endless cycle of digging and filling a hole at the beach. To reduce debt, one can either pay it off with savings or refinance to lower interest. Paying off high-interest debt with savings can save more money than what you would earn in interest. Refinancing works by transferring debt from high-interest accounts to a low-interest one. To avoid accumulating new debt, pay credit card bills as soon as they arrive, don't miss payments, and understand how interest is assessed. It's also worth asking your credit card issuer for a better deal, as the industry is competitive. Investing made easy. Investing can seem daunting, but starting with mutual funds is a smart choice as it reduces your risk. Mutual funds are managed by professionals who ensure the safety of the investment. Saving money in a retirement plan is a wise decision, as inflation can cause your money to lose value over time. Index funds are also a good option as they invest in almost every stock available in a particular index. By buying an index fund, you peg your investment to the overall performance of the stock market. For those just starting to invest, it's best to save at least 3 months' worth of living expenses in a money market fund before considering riskier investments. Tips for building equity through home ownership. Building equity through home ownership is a crucial step towards accumulating wealth. This summary provides 6 essential tips for anyone planning to buy a house, including exploring non-traditional deposit options, shopping around for mortgages, pre-qualifying for a loan, and avoiding problematic mortgage types like adjustable-rate mortgages and balloon mortgages. The summary also advises renters to consider economic factors and assess equity prospects before buying a house. In case renting is the better option, renters should always study the lease, negotiate with the landlord, and maximize tax deductions to reduce their expenses. By following these tips, aspiring homeowners can build equity while avoiding costly mistakes in the home buying process. Maximize your wealth through tax strategies. Smart investors know that the key to wealth accumulation is not just about the money you make, but the amount you keep. Tax liability can eat into your earnings, but with these 10 strategies, you can minimize your tax burden and potentially save a bundle. Bunch your deductions into 1 year, deduct your moving costs, check your withholding, take advantage of state and local deductions, and consider taxes before investing or getting married. Utilize tax-favored employee benefits, investigate special tax breaks for self-employed professionals, and consider a home equity loan to refinance high-rate credit card debt. When filing taxes, it's important to review forms carefully before submission and avoid expensive rapid refund services. By implementing these strategies, you can maximize your wealth and take control of your financial life.
In conclusion, Beth Kobliner's Get a Financial Life, Personal Finance in Your 20s and 30s arms you with the knowledge and tools required to redefine your financial life. By prioritizing health insurance, managing debt, saving for retirement, and investing in mutual and index funds, you stand a better chance of achieving financial stability. This summary emphasizes the importance of understanding and minimizing taxes, as well as considering home ownership and tax strategies. Driven by the goal of helping you establish a strong financial footing early in life, the book encapsulates the key takeaways that will guide you to create a comprehensive plan for financial well-being well into the future.